Today I want to talk about stock market crashes just a little bit, and I'll admit that the title of today's video is a little bit of clickbait, but it's actually really important. So if you want to prepare for a stock market crash, it doesn't work by just looking at a simple chart. Okay, there's more you need to do. One of the things I would suggest everyone to do is study up some history. So there's a book that you can read. It's called The Panic of 1907. And by the way, I get no endorsement fees or anything for telling about this book. It's just I'm reading it now for the third time actually since, I don't know, I've had this book for 7-8 years, probably something or more. Great book for perspective. They give you analysis of how crashes happen, you know, all the things that sort of get interlinked. And I'll tell you that I think right now, I'm not quite sure we're there yet to get a real stock market crash in like a big sense, kind of like this kind of stuff. But I do think it's getting a little bit dicey. And again, we've been talking about it here on these videos for the past couple of weeks. You know, we walk our clients through this every single day in our member calls, member videos, all the stuff we do every single day. And so I want to show you guys a chart real quick to give you a little bit of perspective where we are right now. But again, I'd encourage everyone to read this book, The Panic of 1907, Robert F. Bruner and Sean Carr is what this book is. Great history lesson. So let's quickly go to the chart. I want to show you one chart to give you a little bit of perspective on all this. And what you can see is the S&P 500. All right. And so what this is a weekly chart, and the moving averages here, just so you know, that yellow line, that's this one here, this is your 50-week moving average. And you can see we've actually held that again last week on a closing basis. But I think what's more important here right now to understand is what happened to up here. The people that bought the S&P 500 or bought stocks up here upon this, what so far can be called a breakout fakeout, okay, this bit here. The people who bought stock up here are basically left holding the bag right now. Okay, I'm not saying the stock market can't rebound. It absolutely can. But I'm telling you, when the market now, if the market rebounds, or whenever it does rebound, and I do think there's likely to be a year-end rally, but as the stock market starts to rebound, there's going to be a lot of people up here that are trapped, the bag holders, that are going to look to sell their stock. Because right now they're very scared. So once they get back to break even, there's going to be selling pressure up here, because right now this looks like a potential sort of double top, like a breakout, fake out kind of move, even though on the monthly chart it still looked good. Right now there's a real concern here that this might have been a double top. And again, the selling pressure, think about the people, if you bought stock up here, what is your likely course of action when the market rebounds? It's probably going to be to at least lighten up some, and so there's going to be a lot of selling pressure taking place up there. So, but again, this is just a bit of a perspective chart for right now. I don't think this is enough to really prepare for a stock market crash. Stock market crashes don't just happen because something happened in one day. They're, you know, an accumulation of things over many years. Right, so for example, if you read this book, or you know, you can study up on other stock market crashes. Study up on the most recent one, the financial crisis, 2008 and 9. You know, that was an accumulation of things happening over a decade or so, not just a couple of weeks or one move on a chart on a weekly basis or a monthly basis or whatever. So again, I'd encourage everyone to read this book. Again, the point is, if you want to prepare for stock market crashes, you got to read up on history and you look at it through the lens of what's happening over the course of a few years, as opposed to just what's happening on one day. Because if you look at it on a one day or week-over-week basis, as much as that's important, you're then at risk of making conclusions on a simple chart with very little data. And you end up chasing charts, whether that's shorting a market that's already dropped a lot, or trying to buy it, or chase a market higher that's already rallied a lot, like we saw on that breakout, fake out in the S&P. So anyway, hope this helps. We'll see you guys tomorrow.